Are you tired of feeling completely lost when it comes to trading? Like not knowing when to jump into a trade, when to bail, or where to set those all important stop losses and profit targets? Don't worry, you're not alone. Tons of traders are in the same boat trying to figure out the secret to successful trading. But what if I told you there's a way to cut through all the confusion and trade with absolute confidence? Picture this: you know exactly when to enter a trade, set your stop loss like a pro, and consistently hit your take profit targets. Sounds like the trader's dream, right? Well, that's exactly what we're diving into today. First things first, open up TradingView and choose any chart. This strategy works on all charts and time frames. Head to the Indicators tab and search for the high-low optimized trend tracker. Add it to your chart and you're set up for some serious trading action. Now, let's optimize the high-low optimized trend tracker indicator for your scalping strategy. Go to the Input tab and set the OTPOT parameter to 7. Keep the default optimization value as is and adjust both the highest and lowest length to 14. Leave the moving average type at its default setting. Once that's done, pop over to the Style tab and customize the indicators line and chart colors to your liking. Now that you've got this bad boy all dialed in, let's add a second indicator. Head back to the Indicators tab and search for the 10 indicators in one there. It is ready to roll. Add it to your chart and follow my lead to tweak it a bit, and then we'll be ready to turn and burn. The high-low optimized trend tracker indicator is a fantastic tool for spotting market trends. It has two main lines: the upper line for the highest price and the lower line for the lowest over a specific time frame. When the price is above the upper line, it signals an uptrend. This is when you want to look for a potential buying opportunity, but if you see the price dipping below the lower line, it could be a sign of a downtrend. This indicates the market might be heading lower, and you'll want to adjust your strategy to align with that. The area between the lines is called the flat zone, which shows when the market is moving sideways. During this phase, it's usually best to avoid taking positions as there's no clear trend to follow. Now, here's where the high-low optimized trend tracker indicator becomes super useful. If the price is above the higher line but dips into the flat zone, wait for it to break above again. Once it closes above the higher line and the bars are highlighted, you've got an uptrend and a potential buy signal. But before you jump in, make sure the conditions are right. Check your 10 indicators in one. You're looking for all components to show green, confirming that the momentum and trend agree with the buy signal. Once everything lines up, you can confidently enter a buy trade. Place your stop loss at the lower line or the most recent swing low. For your profit target, aim for a risk-reward ratio of 1:1 for a 1-hour time frame and above, and/or 1:2 for time frames lower than 15 minutes, depending on your strategy. Now, what about sell trades? If the price is below the lower line but moves into the flat zone, wait for it to break below the lower line again. Once it closes below with highlighted bars, you've got a downtrend and a potential sell signal. Just like before, check the 10 indicators in one to make sure everything is in sync. If all components are red, confirming both momentum and trend favor the short trade, you're good to go. Place your stop loss at the higher line or just above the most recent swing high, and keep the same risk-reward ratio of 1:1 for a 1-hour time frame and above, and/or 1:2 for time frames lower than 15 minutes for your profit target. To grasp how this strategy works, let's look at some examples. In one case, the price moved above the higher line with the bars highlighted, signaling a potential uptrend. The 10 indicators in one confirmed the buy signal, showing green across all components, so momentum and trend supported a long position. The buy trade was executed, stop loss was placed at the lower line to manage risk, and a profit target was set using a risk-reward ratio of 1 to 2. Since this is Bitcoin's hourly chart, in another scenario, the price dropped below the lower line with highlighted bars indicating a possible downtrend. The 10 indicators in one confirmed the selling opportunity, with all components pointing toward the sell signal, supporting a short position. Following the sell signal, a short trade was executed, a stop loss was set at the higher line, and the profit target was adjusted based on a 1-to-1 risk-reward ratio, because this is euro against the US dollar 3-minute chart. These examples show how you can effectively combine these indicators to identify strong buy and sell signals. It's all about leveraging the power of trends and momentum to spot high-quality trading opportunities. Board our crypto arc, where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success. We've tested this strategy on crypto major pairs like Bitcoin, Ethereum, and Solana within a 15-minute time frame and could achieve such jaw-dropping results. By no means this is not financial advice and needs a lot of effort in practicing through back and forward testing it on a demo account, but you can see what it is capable of. If you want to turn this or any other strategy into a fully automated bot with alerts so it does the job for you while you're away, make sure to watch the recommended video on your screen. And if you even think this is not for you, the other recommended video will satisfy you for sure. We've tested this strategy on crypto major pairs